Hello and welcome back everyone to the Money Control live stream. It's been a very lackluster session for the Bulls to close out the week. And I mean, even if, of course, the global cues have been positive, our markets have been, flip-flopping between gains and losses throughout the session.
Wait a minute, CJ. Why is it always seen from a Bulls point of view? Why not about the Bears, CJ? Well, I always had this question for you.
But even the Bears are not having a great day, Santo. It's not like that the Bears are having a,
if there are any left at this point in time.
Exactly. I mean, looking at you, it seems that there's still some left out there. I mean, as long as the last Bear has not fallen, I don't think we can ever be sure. But I mean, nothing to worry about. Clearly, the uptrend or the bullish uptrend is still there. I mean, there was an opportunity for the market to, cater, fall today, some profit booking to come in. But clearly, that has not happened. That goes to show that there is still a lot of optimism out there on the street. Overall, if you look at the Nifty and Sensex, they are clearly looking set for a very positive weekly close. Very strong gains on the index with almost 300-point jump for the Nifty this week. Positive cues from the global markets, as I mentioned. If you look at the European markets, they were quite strong. You look at the Asian markets, they also ended on a very positive note. So overall, the setup seems still quite calm for the bulls.
Well, I think most of them would have taken off for the extended weekend, which is why probably you're seeing the market languishing.
Everybody has our life, Santo. I mean, some people have.
But that said, CJ, the mood definitely is not by any means cautious, I would say.
Yes.
It's, I think now the verdict which most people seem to have reached at is that this was not a bear market rally. This is a proper bull market which had taken a break, and that which also is not a very good sign. When too many people get exuberant is when probably the market begins to correct. But that said, CJ, we've seen it in the past also. Momentum can be a double-edged sword. On the way up, a lot of disbelievers have converted and joined the bandwagon, and selling has stopped. But when the trend reverses, probably, CJ, I think we could see a swift fall. The downtrend could be equally dramatic.
I remember you mentioning in the morning, that about 75% of the Nifty stocks are above the 200 DMA, and I thought that why not check for the Nifty 500? And I realized that around 225 stocks, even within the Nifty 500, are also now above their 200 DMA. So almost 45% of the index is actually now moving above. So clearly, this is a very broad trend that is unfolding, and you could see it pick up steam in the coming weeks ahead. Of course, there are a lot of data points, a lot of policy events coming up. But I think overall, generally, bulls will have a very happy extended weekend.
Definitely, CJ. From the look of it, it does seem that at this point, there is nothing that can stop the bulls for now. And the news only seems to be getting incrementally better. Although I would think that as soon as the news starts to turn positive, that's when bulls should take a breather and some bit of caution should seep in. But this definitely does not seem to be the case, the way the market reacted to softening of inflation.
Well, on that optimistic note, let's quickly move on to some of the stocks that are on our radar today, starting off with Santo.
Well, Bharat Forge, the stock is among the best performers in trade today, up close to about 7%.
Wow.
Very strong set of first quarter numbers there, CJ. You can't really dispute with that. And the numbers on most parameters have been ahead of what analysts had been expecting. The management has said that now exports account for nearly 60% of the revenue. That's a huge, that's a significant chunk. At a time when there is concerns about global headwinds, the company has managed to post very strong growth in exports. Plus, there are these two verticals of the company, that's aerospace and defense, which are showing good signs of resilience even in this kind of market and have the potential for good growth. And management is quite optimistic on that front. Besides that, it's also trying to ride the upcycle in the EV business. It's setting up a plant for making aluminium parts which will cater mostly to electric vehicles. So everything seems to be falling in place for Bharat Forge at this point in time, and the management also expects a minimum 100 basis point improvement in margins going forward.
That is a very strong commentary on the back of very strong number. I mean, to be honest, Santo, I was a little taken aback by the strength in the earnings of the company, given the fact that if you look at the Class 8 truck orders over the past few months, they had not been really rosy out there, and that made me think that probably Bharat Forge may have a bit of a lackluster quarter this time around. But clearly, the management has done quite well for itself. But that said, I think where of course there is cause for celebration that export business is doing well, and of course now it is almost 60% of revenues. That also can be a point of risk as well, given the fact that the outlook for the global economy is just not that great at this point of time. I mean, especially the US market, which is where Bharat Forge has a lot of exposure, along with Europe. Both of them are, in the midst of or heading into a recession in the coming winter. So clearly, I think it is something that investors would want to take a note of. Apart from that, of course, if you look at the Class 8 truck orders, who are the manufacturers are the major clients of Bharat Forge. There also Class 8 truck orders fell to a multi-month low in June. So clearly, I think the CV space, PV, passenger vehicle and CV space seems to be probably deteriorating in the US as well. And I think it will be interesting to see how that develops going ahead for me.
Look at it the other way around, CJ. Despite the weakness in the truck, in the CV segment, the company has managed to come up with very strong numbers. So probably that's saying
it's
something.
hard to argue against it, but just a word of caution from my end, because of course at this point of time, it seems like things are going or flowing towards in Bharat Forge's favor.
And the next stock is also on the CJ's pet theme, that is electric vehicles.
Greaves Cotton, definitely. I mean, you talk about Bharat Forge's performance, look at Greaves Cotton's performance. Clearly, investors are very, very happy with the numbers that the company has put out today. And the EV growth journey, I think in particular, Santo, that continues. And now EV is almost close to 50% of business. So probably by next quarter, you could have, Greaves Cotton now become a pure play EV company in India. Probably one of the only EV companies which actually has almost 50% of revenues coming from the electric vehicle segment. Now, the management has suggested that demand conditions for both the two-wheeler and three-wheeler EVs remains quite strong. They have their own, EV. Ampere has seen continuous month-on-month growth over the past 3 to 4 months. So that is also a very, very good sign, despite all the hullabaloo around, the EVs catching fire during the summer season. Apart from that, of course, they are also expecting margins to improve. Of course, this has been a common theme within the auto space, wherein because of the reduction in raw material prices that we have seen over the past couple of months, margin is something that a lot of people are very optimistic on. And overall now, I think, Santo, going ahead, the company has already enjoyed a lot of, warmth from the investors over the past 1 year. But now going ahead, I think it will be continuously be valued as a EV growth story, a high growth story, which is also very profitable. And I think that could, be a bumper party for investors.
Well, market appears to have cooled somewhat to the EV story. 2 or 3 months back, the moment you mention EV and you see the stocks catch fire as much as like some of the vehicles also did, but that has
catch fire in a good way, right?
Catch fire in a good way. But the enthusiasm seems to have somewhat been tempered now.
I don't.
Again, in the case of Greaves, CJ, look at the longer term track record. That is where I think most investors are a little cautious, and they have good reason for that. Whatever the case for why the company has underperformed in terms of its earnings growth over the years. Now, last 2 quarters we have seen a big bump up in revenues, top line. It's been huge jump. Consistently the company has been clocking over 600 crores. Margins though continue to remain pretty much at the same levels. I think what the investors will be looking for is execution and some signs that this trend is going to sustain, and the company will get its act together this time. There have been numerous false starts. If you look at how the stock has performed, it went on to hit a high of about 241 sometime last year, and after that a steep dive, almost again fell almost 50% from those levels, and has not really recovered despite a very strong improvement in the top line growth. It's from 130, it has moved to about 172. That's a gain of close to about 30%, but still the stock is very far from its 52-week high, despite the market being aware of all the initiatives that the company has been taking. So they seem to be a little cautious in accepting this story.
I think, Santo, a big part of that, correction of 50% of the stock was also due to the fact that interest rates have, gone up. And a lot of these high growth stories were getting beaten up in the market, not only here in India, but abroad as well. And I think given that the fact that interest rates are no longer at the same level that they were when Greaves Cotton had hit its record high, clearly that journey back to the record high would now be driven by earnings, and as you mentioned about execution. So I think every quarter, as investors see more and more signs, I think you will continue to see gradual but steady gains on the counter. And I think, as far as the past is concerned, I think sometimes it's, good to let go of the past and not hold it against a person or a corporate entity in this instance. So let's see, maybe
it reminds me of a saying that, every saint has a past and every sinner has a future.
Exactly my point.
So Whirlpool India, the other stock, disappointing set of earnings there. Again, this is for the second consecutive quarter there. But CJ, look at this. Numbers have been disappointing, and yet you see the stock price steadily inch up.
Yeah.
That usually is an indication that the worst of the negative outlook is past and the stock price may have bottomed out. According to ICICI Securities, the company's revenues are expected to grow around 22% at a compounded rate between now and FY 22-24. Besides that, already we are seeing some easing of margin pressures, and that would only go on to help Whirlpool in the quarters ahead.
I think, Santo, of course, the June quarter earnings have been very strong for Whirlpool of India. And I think that was already reflected in the stock price, because we have seen almost a 14% rally in the stock in the past 3 to 4 weeks in the run up to the earnings. And probably that is why we have seen some profit booking, creep in at this point of time. But I would also, tell you that a lot of brokerages, I mean, if you count Nirmal Bang, you talk about Centrum Broking, both of them have downgraded the company, their rating on the company because of this rally. They feel that, yes, the story is great, but at this point of time, the valuations are just too rich. I think the market has overextended itself as far as Whirlpool is concerned. At one point of time, I was surprised because if you talked about Whirlpool 6 months ago, nobody would even, listen to you, because the story, it seemed, was over because of the margin issues. Now, clearly, the margin issues are improving going ahead, but I think that story will probably still continue in the September quarter, because I think September quarter on a year-on-year basis, you will still have elevated commodity costs affecting the margins of the company. So, A, of course, the margin story is there, and B, the valuations are just too rich, and I think that is why the stock has not reacted very, jubilantly to the numbers that the company has posted. Well, last stock on my radar today is Alicon Castalloy. Yes, it's a relatively lesser known stock, but what an earnings performance, Santo. Very strong growth in the June quarter, along with management commentary. If you look at the sales growth, about 63% year-on-year growth in sales. Operating profit almost more than doubled on a year-on-year basis. Yes, margins were a little disappointing, but that is generally because automobile companies, generally all the automobile and auto ancillary companies, have seen margin pressure in June quarter because of higher raw material prices. But the growth story still remains quite strong, and this is reflected in the fact that the company has raised its guidance from about 18% growth in FY23 to about 25 to 28% growth. That is a massive jump. To make that sort of an assertive guidance goes to show how confident they are about the demand conditions. And lastly, almost, it seems like this episode is more about EV stories, because even Alicon has almost 25% of its order book coming from EV players. So clearly, this is one company to watch out for.
CJ, no disputing the numbers; they've been fairly impressive. Just one point here: 10 years back, between 2012 and now, the company's top line has almost just about doubled, a little over doubled. Yeah. But if you look at it, the stock price has kind of risen 10 times, very fast, Yeah. And typically when you see that kind of spectacular rise in stock price, after that there is a consolidation phase. Remember, the stock already has been on the steadily climbing for almost 10 years, and the improvement in numbers has been gradual. If you look at the bottom line, the improvement has not been all that much. At compounded rate, it's been very ordinary. In fact, for the last 3 years, it's minus 23%, which partly could also have to do with the COVID impact.
Yeah.
So, but that apart, after such a strong run over the last decade, I would be a little cautious, unless of course the company can show that it's got some ace up its sleeves.
I think definitely it's going to. If you talk about some of the investors who have got into Alicon, Santo, you have last year HDFC got into it, Aditya Birla, a mutual fund got into it. So clearly, a lot of institutional and HNIs are probably one of the reasons why the stock has performed so well over the past 10 years. And clearly also the retail investors have also jumped on the bandwagon, given the fact that the company is largely in the small cap space. So I think this is one story that probably is a long-term story that a lot of people are playing at. And I'm not surprised that a stock performance has, jumped ahead of the earnings performance at this point of time.
Well, too many cooks spoil the broth, isn't that the saying? So too many
Come
fund
on.
managers getting
Come
into a
on.
stock also is not really, that becomes what is known in market
And,
parlance as a
that
crowded
that
trade.
has always been the case for large cap companies, so it's a good sign that a small cap company is attracting so much, institutional interest.
Well, last talk this afternoon is Sumitomo Chemical. Good set of first quarter earnings there. And according to ICICI Securities, the company is well positioned to benefit from the export opportunity in global agrochemical market. And besides that, there's also an opportunity in terms of outsourcing its products to other group companies. ICICI Securities has said that the company has managed to gain some market share during the quarter gone by and has posted impressive numbers despite the fact that the monsoon had been a bit delayed, something on which CJ keeps harping all the time on how they will affect agrochemical industries. And lastly, Sumitomo can benefit from the parent's R&D capability and distribution expansion in the country.
Well, Santo, I still hold the line that delayed monsoon will have an impact, but we'll see majority of that impact in Q2, because let's not forget the fact that a lot of rabi crops that have been sown, the sowing has been down on a year-on-year basis, more importantly for paddy. So I think you will see the majority of that impact of demand pressure in the second quarter for the company. Also, one thing that I noticed with respect to Sumitomo is that the working capital position is very stretched. It's not something that is only specific to Sumitomo, but it is a trend that we are seeing across the agricultural spaces, only because they are holding on to higher cost inventory, and at the same time the receivables for them are quite slower, probably also reflective of the rural conditions at this point of time. So I think yes, it's a good story, it's a good MNC story at this point of time, but I will be a little skeptical to go gung-ho on the stock, given the fact that Q2 could see a lot of demand pressure.
Well, with that, a quick look at the markets. The trend remains still very flattish. The Sensex
very, very lackluster. I mean, this is no Friday afternoon move, right?
I think there's been a bit of an uptick here. Nifty
Yeah,
is now up
Nifty
52 points. Well,
yes,
it's
exactly.
no longer as lackluster as we had thought.
I mean, when we started the show, I think Nifty was higher by only 5 points, Santo. So clearly, there's been a little decent up move, 45 points. Even if you look at the mid cap, I think it's the mid cap space which are stealing the limelight today. Higher by about 0.8% at this point of time, while the Nifty small cap also is not too far behind. I think it's higher by about 0.4 to 5%, almost 0.3% at this point of time. And I think what will hearten bulls, Santo, is
like
the India
you.
VIX. Is the India VIX down about 4.2% actually, and below the 18 points handle. So that is clearly a good sign that at least bears are not adding short positions, and probably we are seeing some bit of covering also happening in the last half an hour.
To me, that is a sign of complacence. Bulls are now getting carried away.
I
CJ,
don't
beware.
think they're getting carried away, Santo.
And well, what should we be looking forward to now?
There is a lot of economic data coming out today, domestic economic data. You had the retail inflation for the month of July coming out later in the evening, and then you have the June IIP data as well. So that is something to watch out for. Apart from that, of course, a lot of earnings are also coming out post-market hours. You have LIC, Hero MotoCorp and ONGC coming out with their June quarter numbers. So market will be reacting to both the economic data as well as these set of earnings on Tuesday morning.
Well, with that...
What are your weekend plans, Santo?
Well, nothing much.
I mean, 3 days weekend.
That's when every tourist spot in this country will be packed to the brim, and it's best to stay at home and chill out, I would say, CJ.
Enjoy your own cooked food at home, right? And probably a drink or two.
Exactly. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it and have a wonderful weekend. Do let us know what you thought about the show in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for SFA financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live Tuesday morning, not Monday morning, Tuesday morning at 9 a.m. Till then, have a great extended weekend.